So good morning, everyone. It's a great pleasure to join this year's CF Group Symposium in Princeton. So thanks so much for the invitation. So the paper I'm going to present today is about the green patents signaling impact on the voluntary climate disclosure decisions. So for the motivation, we know that when we are talking about voluntary climate disclosures, a common issue is the credibility. Because unlike financial disclosures, which can be verified by external audits, voluntary climate disclosures usually lack such verification processes or even a clear reporting standards. So it is easy to raise credibility concerns. And in light of this concern, we should observe only a few firms to disclose because we know less credible information is also less valuable. However, in reality, we know that there are increasing number of firms have started to disclose, especially in the recent decades. So, and also the disclosed information can influence the stock price movement as suggested in some asset pricing literature. So, this complex findings leading us to ask why? How do investors to assess the credibility of climate disclosures? And in this paper, we examine whether green patents can help to distinguish the credibility of disclosure. And especially, we focus on the signaling impact of green patents. So this signaling function of patents was first introduced by Long 2002, who suggested that patents be more measurable than the other forms of knowledgeable capital, making it a tool for conveying credible public information. So building on her work, we examine the signaling impact of green patents. So at this point, you might ask, what exactly do green patents signal? And our answer is that green patents can signal firms' commitment to reducing their climate impact and therefore increase the credibility of disclosures. So we expect this signaling function of green patents can increase credibility for two main reasons. Firstly, green patents represent tangible climate actions because we know the patent technologies are critical for achieving the net zero commitment, the targets for the Paris Agreement, for example. So holding green patents can provide this tangible evidence to prove their actual climate actions. It's observable to everyone, right? And second, green patents are credible public information because patents need to go through the patent examination process. And this process is less subject to the company's manipulation. And also we know obtaining patents could be costly. So this high innovation cost can also isolate the companies who are genuinely committed to climate actions from those that just talk the talk. So taken together, okay.
Check with all next terminal on.
No. Great. It's okay. No. Doesn't work. I'm sorry. Why? Sorry for that.
Okay, now.
Can you just change it to the next slide? That's the one there. Oh, yeah, much better. Great. Okay, so let's continue with the other key points in the slides. So taken together, we know that voluntary climate disclosures could involve in credibility issue, and therefore assessing the truthfulness of climate disclosures usually depends on investors' perception of a company's commitment to the climate commitment. And therefore, holding green patents can build investors' trust and therefore increase the perceived credibility of disclosures, which in turn can incentivize the company to provide such information voluntarily. So this is our main hypothesis. Green patents can increase voluntary climate disclosure due to the increased credibility. Okay. So for the contribution Well, in the motivation part, I mentioned that there are existing studies suggested that investors can distinguish the credibility of climate disclosures, but we don't know how. And therefore, this paper, our study helped to fill this gap. Our findings suggested that the companies with more green patterns can help investors to distinguish the credibility of disclosure and therefore incentivize firms to provide such information. And also this paper contributes to the understanding of the signaling impact of green patterns, which haven't been systematically investigated. And in addition, this paper contributes to the literature on the determinants of voluntary climate disclosures. Well, given the ongoing debate on the mandatory or voluntary disclosure framework, so I understand what are the factors driving the disclosure decisions are still important. Well, to perform the analysis, we know that simply run an OLS regression could be endogenous. Why? Because green patterns can conflate this innovation capabilities impact and the signaling impact simultaneously. So for this innovation capabilities impact, it's highly related to the quality of green patterns. For example, if a company has some high quality breakthrough innovation, so they can demonstrate better environmental performance, right? And therefore influence the disclosure decisions. And we call this the performance driving channel, but it has nothing to do with the pattern's signaling impact. And therefore, our identification strategy is to find a factor that can only shock the green pattern's numbers, but do not shock the pattern's quality. Well, the specific IV we used is follow some existing paper like Ferryman's 2020, it's a GF paper, to use the pattern examiner's leniency to construct this IV variable. So, simply speaking, given a certain level of pattern's quality, a lenient examiner is more likely to grant patents than a strict examiner. So if you are lucky enough, your patent applications are assigned to a lenient examiner, so you are more likely to grant to receive the granted patents. So this is the basic mechanism of this IV variable, and the validity of our IV approach is actually based on two key features during the patent examination process. Firstly, the patent of the applications will be randomly assigned to a patent examiners. So the patent company cannot decide who is the examiner to handle their patent applications. It's a random process. And second, the examiners differ in their leniency level to grant patents. So I hope these figures can better explain the difference. We can see a large difference in the grant rate across all the patent examiners in the USTPO, US Patent and Trademark Office. And therefore, the chance to encounter a lenient examiner can significantly influence the number of granted patents, right? And another key point I would like to mention here is that only those low quality, low value technologies are sensitive to the examiner's leniency, right? Because for those high quality breakthrough innovation, they will be granted anyway, regardless the patent examiners, the leniency level. So our IV variable actually have little to do with the patent's innovation capability. In other words, we can rule out the impact from the capabilities aspect and only focus on the signaling impact of green patents. So this is our IV variable, and this slide shows how we construct this instrumental variable. We actually follow the study by Hague et al. 2023 to construct this patent level leniency score, as I highlighted here. And next, we also aggregate it to the firm level by averaging all of a company's granted green patents in a given year. And therefore, this average leniency is actually a firm by year level measurement. So a higher average leniency indicates the firm is more likely to grant green patents from lenient examiners. Okay, and once we get this instrumental variable, we can move to the two-stage regression model. For the first stage, we regress the number of granted green patents on this average leniency measure. And we also consider firm fixed effects, industry by year fixed effect, and green patent application number fixed effects. It is to say, there is a concern that a company with more patent applications will receive more granted patents, right? So this is why we using this patent number application number fixed effect to account this potential impact. Well, once we get the predicted green patents from the first stage, we follow this GF table to accumulate green patents to create this green patent stock. It's to account for the impact from historical green patents, because the rationale is that the decision to voluntary climate disclosure should be influenced not only by the current year's green patents, but also the historical green patents, right? Because these historical patents are still effective. So these patents may still have the impact on the disclosure decisions. So this is why we construct this green patent stock. And here we are using the annual depreciation rate of 15% as commonly applied in the literature. Okay, so finally, in the second stage regression, we just regress the disclosure decision, which is a dummy variable on this predicted green patent stock. So for the data and sample selection, we are using the report of scope 1 emission to indicate whether a firm issue voluntary climate disclosures in a given year. And we have two main reasons to apply the scope 1 emission. Firstly, we know emissions are a key metric for climate risk, climate disclosure report. And also second, the scope 1 emission is under full control of the disclosing firms, unlike scope 2 or scope 3 emissions, which are the indirect emissions. The availability of the data may depend on their suppliers or customers. So for these two reasons, we apply scope 1 emission, and the data comes from Refinitiv. For green patents, we apply these green patent classes as categorized by WIPO environmentally sound technologies. So which means WIPO has already categorized the patent classes, which are green and non-green. So we can use those green class patents directly. Well, for examiners' leniency data, it comes from patent examination research data sets. So our final sample contains 1,020 public firms in the US, holding around 48,000 granted green patents, and time range from 2002 to 2018. Okay, so now we can look to the first stage regression result. As I highlighted here, we did find a positive and significant influence of examiners' leniency on the number of granted green patents. And also, when we are looking at the F statistics at the bottom, we can say the F statistics are greater than 10. So we can mitigate the weak instrument concern and allowing us to look to the second stage regression. So in the second stage, the regression results are actually reported in column 3 and column 4 in this table. We do find a positive and significant influence of green patents on the voluntary climate disclosure decisions, especially in column 3. We find for an addition of 1 green patents can lead to an increase in the likelihood of voluntary climate disclosures by 2.8 percentage points. And also in column 4, when we are focusing on the initiation of disclosures, which means the first time the company discloses their scope 1 emission, we also find consistent results. So taken together, the result in this table align with our main hypothesis that green patents can increase the likelihood of voluntary climate disclosures. So next, we turn to explore this credibility channel, because our main hypothesis is that green patents can increase disclosure due to the increased credibility, right? So however, we know directly measure credibility is challenging. So we turn to rely on the stock market reaction as the first measure of disclosure's credibility. So the rationale is that if green patents can increase the credibility of disclosures, and therefore investors should respond to such more informative information with higher stock returns, right? And our test result do support this hypothesis. We find a higher cumulative abnormal return around the disclosure date for companies with more green patents. And the result is quite consistent under both the market model and pharma fringe 3 factors model. So all this result from the stock price movement support our hypothesis from the credibility channel. And also, we also test this credibility channel using the change in institutional ownership. So existing study find that institutional investors prefer firms with better disclosure, right? It can help them to reduce the monitoring cost. And therefore, following this logic, we expect if green patents can increase this perceived credibility, it should attract more institutional investors, right? So our test results also support this hypothesis. We find the increase in institutional ownership following the disclosure for firms with more green patents, and especially for those in column 2 for those CDP signatories, which are climate conscious investors. And therefore, the result from the institutional ownership perspective also support this credibility channel. Well, apart from that, we also find some credibility enhancement evidence of green patents. So the mechanism in this test is to say if a company's credibility, disclosure credibility, is already at a high level, and then it will diminishing the impact of green patents, right? It will lead to the impact of green patents should be less pronounced. So following this logic, we first distinguish the disclosure credibility based on the report of good or bad emissions news. Because existing studies find that the report of bad news should be more reliable than the report of good news, because the company usually have less incentives to manipulate their emissions to create the fake bad news, right? They usually just have some fake good news, and therefore bad news should be more reliable than the report of good news. So we first rely on the report of good or bad emissions news to measure credibility, and the result in column 1 and 2 indicates, especially in column 2, when the disclosure about some bad emissions news, the impact is less pronounced compared with the result in column 1, when the disclosure are about some good emissions news. Okay, sure. So this result in column 1 and 2 consistent with our hypothesis. And in the other columns, we use alternative measure of disclosure credibility and also find consistent result. For example, in column 5 and 6, we use the external ESG assurance to conduct the test, and the results are quite consistent. Well, this cross-sectional analysis is based on a company's reputational capital. So the idea is like a company with higher reputation can also increase the credibility of disclosure, and therefore lead to the less pronounced impact of green patents. And our result also consistent with this hypothesis. But for the time limit, I just skip the details and move to the robustness test. So the remaining part of this paper involved in different robustness checks. One of this is to address the concern that the assignment of patent applications in some art unions may not random enough, and therefore lead to bias in our IV variable. So we address this concern, we follow the approach by Fell and Javel 2020 to focus on a subset of random art unions, which means the patent application assigned only based on the last digit of the application number. And we just repeat the 2-stage regression and find consistent result. Our results are still here. So finally, we can conclude this paper. We show that green patents can increase voluntary climate disclosure decisions. And for firms with more green patents, disclosures are perceived as more credible by the stock market investors, as evidenced by the higher stock returns and increase in institutional ownerships. And also we find some credibility enhancement evidence as the impact of green patterns are less pronounced when the disclosure are already perceived as credible or for firms with high reputation, reputational capital. So that's it. I think I can finish here. So thank you so much.